Tech stocks tumble as rate cut hopes fade. 1. Wall Street tumbles as tech sell-off extends. On November 14th, the major U.S. indexes dropped sharply, driven by a renewed sell-off in technology stocks and fading hopes for a December interest rate cut by the Federal Reserve. For example, Applied Materials shares fell over 3% early on November 14th after U.S. export curbs on China weighed on its business. Welcome to Capital Edge Grid News. So let's get back to the topic. Why this matters. The tech sector is often the engine of U.S. growth and market optimism. When major tech firms stumble and rate cut expectations shift, broad market sentiment can flip fast. The tech correction has started. Here's why Wall Street is nervous and what you should know. 2. Big change. Walmart CEO to retire. On November 14th, Walmart announced that Doug McMillon will retire in January and that his successor will be John Furner, the U.S. operations chief. Why this is viral worthy. Walmart is the largest retailer in the U.S., and a leadership change signals strategic shifts could be coming in retail tech, supply chain, e-commerce. High relevance for consumers and business watchers. Walmart's leadership shift explained. Why it matters for shoppers, jobs, and the retail game. 3. U.S. tariffs on Swiss goods slashed, massive investment promised. On November 14th, the U.S. and Switzerland struck a deal. U.S. tariffs on most Swiss goods will be cut from 39% to 15%, and Switzerland will invest $200 billion in the U.S. by 2028. Why this stands out. A huge foreign investment pledge plus major tariff shift. It underlines evolving U.S. trade strategy, global capital flows, and may impact multiple sectors. $200 billion investment deal and tariff cut. What's behind Switzerland's big bet on the U.S.? Capital Edge, grid your edge in finance.